Warm greetings to our viewers and welcome back to Bulletin Bites. Latest news on law, tax and business in India for Q4 2022. Rödl Partner sends across warm regards and wishes all our viewers a very happy new year. At the start of every year, we hear everyone around announcing their new year resolutions. Right from attaining a healthier lifestyle to focusing on wellness or personal well-being, like spending time with family and friends are few to name. This year, we also make a resolution to bring to you the latest, most recent and in vogue news. On this note, let's begin with the Bulletin Bites Q4. Starting with company law updates, a relief for companies in conducting their annual general meetings. MCA has further allowed companies to hold the annual general meeting via video conference or other audio-visual means till 30th of September 2023. Another important announcement for companies who intend to file statutory forms with the Registrar of Companies, MCA has announced to launch certain web forms which will replace the existing e-forms. This means that companies will now be required to fill their statutory forms on the MCA web portal itself. On the labour law updates, the first update that we would like to address is that the government of Andhra Pradesh has removed restrictions on employment of women in factories during night shifts. Further, factories employing working women in the night shifts are required to adhere to additional compliances like seeking written consent of such women, providing transportation facility, washrooms, and drinking facilities. Another important update is pertinent to be noted by companies which have enrolled NEEM trainees. As per the recent update, the NEEM scheme has been discontinued with immediate effect. This discontinuation has left the NEEM trainees and other stakeholders with little to no information about how they should proceed, and further clarifications are awaited on the current status of NEEM trainees who are currently enrolled. Moving on to FEMA updates. The next update is especially important for companies who have recently received foreign direct investment by way of share transfer or allotment. The RBI has eased the process of filing forms regarding intimation of such foreign direct investments, through which once a company files the said form, the web portal will reflect the status of the form as auto-acknowledged till the time such form is duly verified by the authorized dealer banks. Moving on to transfer pricing highlights, there have been some interesting rulings given by various tax tribunals across the country. An ongoing issue about royalty payments by Indian companies to overseas group entities has finally met result, where the tax tribunals have essentially held that combined benchmarking approach for royalty-related transactions is not acceptable, and the correct method for benchmarking is comparable uncontrolled pricing, that is CUP method. Taxpayers must reconsider combined benchmarking approach and maintain benchmarking study under CUP method to defend its payment of royalty to group companies. There has also been a ruling on the issue of management support payments to group company, wherein the Bangalore Tribunal has held that in absence of supporting documents to prove that the services were actually received, the arm's length price of the transaction was nil. Based on this ruling, it is important for companies to maintain documentary evidences in respect of services received from their group company. Such entities are therefore advised to review the current status of their service-related documentation. Dear viewers, we would now inform you about some of the key changes under the Customs and GST regulations. During this quarter, the 48th GST Council meeting took place, which had proposed various changes, which included decriminalization of certain offences under GST. It was clarified that renting of residential house by a person in his personal capacity would not be liable to GST. Apart from other changes, The authorities also prescribed the procedure for claiming a refund of GST by persons who are not registered for GST purposes. On the customs side, the government has issued notifications to implement the historic India-Australia Free Trade Agreement as well as added projects in the Project Import Regulations. Further, in order to incentivize exports from India, additional projects have been added in the flagship Export Incentive Scheme under the Indian Foreign Trade Policy. Additionally, due to COVID-19 situation, amendments have been made to the SEZ regulations to allow work from home to the employees of the units operating from such SEZs till December 2023. Let us now move on to the direct and international tax updates for this quarter. Non-residents not having a tax identification number, that is, a PAN in India, faced a practical challenge in furnishing one such required document, which is Form 10(5), which was required to be filed in an online mode. The governing tax body, that is CBDT, has issued a notification stating that non-residents not having a PAN in India or non-residents not required to obtain a PAN in India would be exempted from e-filing of Form 10F until 31st March 2023. This is a welcome relief and will ease out the burden for non-resident entities in India to some extent. Moving on now to some interesting court rulings. The Supreme Court of India has passed a maiden judgment deciding the tax deductibility of late payments of employees' contribution collected by the employers and deposited to the Social Security schemes. Supreme Court has held that such employee contributions should be paid by the employer within the due date specified in the particular Social Security law in order to be eligible as a tax-deductible business expenditure for the employer, thus putting rest to a long pending litigative issue. At the end of every year, companies get busy with closing their book of accounts. As 2022 just ended, the German parent companies would be occupied with the process of the consolidation of financial statements of its subsidiaries worldwide. In our edition of the newsletter, we have highlighted the overall requirements of the HB2 reporting, the HB1 and HB2 differences, and how these differences are reconciled by the Indian subsidiaries of the German companies. Dear viewers, with this we would like to conclude our Bulletin Bites. As usual, for detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.